Hello and good evening. This video is strictly for beginner investors. This is just going to be educational, content that I'm giving out right now. I'm not a financial advisor, but this is just deriving from my investing journey. So a lot of people don't really even know how to invest, specifically people that have just go to work, do their 9 to 5, and because of this particular topic of investing is not really educated in schools. This is a really imperative skill set. Yes, I will say skill set to have because it derives from discipline. Okay, just to kick things off real quick for you guys, I try not to make this video too long. This video is geared towards beginner investors. Um, I would suggest, just again, educational purposes only, I would suggest investing in ETFs. A lot of people don't have time to stock pick and look up companies, look at the operational costs, look at the net profit margin and revenue. So it's best to diversify your money across ETFs, specifically broad-based index funds that are mirrored or wrapped with an ETF. Specifically one here, you can see QQQ, and you have a very popular one here, S&P 500, right? So what I like to do here is I like to compare the long rate of return. When I say the rate of return, this is the amount of money I will receive off of interest, off of the appreciation of the value of the asset that I pour my money into. So here's the 5-year rate of return, you guys. And just take note, I am using Seeking Alpha. Seeking Alpha, this is the free version. So I go 5-year rate of return. One of these are probably the most two popular ETFs that most people know about, specifically for people that don't even invest at all. You've had to have heard about these two ETFs. If not, then I don't know where you've been living. But here in the US, QQQ and SPY are one of the most popular ETFs. Now, looking here again, one of the main things you want to do, right, when you start investing is you want to open up a brokerage account. I prefer Fidelity for my beginner investors because you can set that up as a recurring investment. Not only just Fidelity, you have Robinhood, you have M1 Finance. Okay, they all offer recurring investments to where you don't have to think. They just put your money into these ETFs and then just let it accumulate and compound over time. Okay, so that's one of the main things I want to point out in this video. Take the first step. Open up a brokerage account. Set your account up to reoccurring investment. Put a manageable dollar amount and put your money in QQQ or S&P 500, one of the most popular ETFs that have shown in the past 10 plus years a positive rate of return. Now, don't get me wrong, not every year is going to be a positive rate of return, but when you invest for the long haul, more likely you're going to get a positive rate of return because businesses, our economy, everything improves over time. It's like we're investing in our own humanity. Got me? So if these ETFs aren't doing good, something's going on with the economy. Maybe we're falling back as a human race, right? But guess what? Tech improves over time. Businesses improve over time. So this is what we're investing in. So instead of investing your money into a high yield savings account to where at most you may be getting 5% or less, maybe 6%, more likely you're going to lose your money due to inflation. When you look at these numbers here, inflation is not going to eat away at a 111% rate of return or a 74% rate of return during this 5-year time frame. So invest your money, put recurring investments, and be disciplined. All right. Other than that, that's about it. Have a good day.